Thomas, good of you to join us. I want to just first of all get your view on why the dollar suddenly returned to favour. I mean, people are saying it's down to it being seen as a haven currency. It can't be all down to that, can it, surely?
No, I think it's a combination of factors, but I think the most important factor is that the global economy is turning down, and US investors are the biggest investors abroad, and they are taking money home. But besides that, if you compare to, for example, the euro area, clearly the US data is also looking better. So in terms of euro-dollar, for example, I think the dollar is strengthening both because of risk aversion, but also because of outperformance compared to Europe.
Okay, well, what about also some of these risk-adjusted trades that we had before? We're seeing at the moment them being unwound, aren't we?
Yeah, I think so. I mean, clearly what you see here in Asia is that dollar Asia is moving higher across the board, with the one exception of the dollar CNY. We think it makes sense. I mean, clearly, as I said before, US investors are the biggest investors abroad. They are taking money home, both from equity and bond markets, and that is putting upward pressure on dollar Asia. CNY is the only one out there still holding up.
I'll just talk about Asian currencies. I want to focus on the Korean won. It's taking an absolute beating. Why so? Why that one in particular?
I mean, Korean won is always the most volatile currency in Asia, most vulnerable to dollar liquidity squeezes in Asia. So that is, you can say, the normal one to play from a trader point of view. When you think a dollar Asia goes higher, it's also a relatively liquid currency. So I think that is clearly why the Korean won is vulnerable, like, for example, the INR. But bottom line is, if you look at it from a risk-adjusted basis, I think you will see a lot of the same moves in the rest of the dollar Asia complex, with the exception of CNY.
Your views on the euro?
I think euro is technically, it clearly look bearish. I mean, I think we will see 130 pretty soon. I mean, of course, we need to follow very closely the political developments in euro area, and of course the market is significantly short, so that's a risk. But clearly it looks like we will go to 130. Our end-year forecast is 128. We could probably be there sooner rather than later.
Okay, well, you know, when we look at that, what do you think is the main focus now? What has been priced into the euro?
I think the main focus is really, as you said, I mean, that is the political developments, what will happen to, you know, the EFSF, these things going on around the 13th of October. I think that's the key thing to focus on. Because if you look at the economic data, both in the US and Asia, they are not that bad. But clearly the market is starting to price in a recession, and that's because of the European development. So that's the key to focus on.
Do you think Greece is now totally priced out of it, or should I say priced in, and we're just trading on other fundamentals, if you like?
No, I think that is what the market is pricing in. It is a Greece default. It's not a global economic recession. I mean, the market seems to be pricing that in, but the data does not suggest that yet. So as said, I think we are maybe halfway pricing in some significant happening in Europe, but that is what the market is focusing on. It's nothing to do with economic data at the moment.
Very quick word, of course, we were just talking before we came to you about the Australian interest rate decision, the move down for the Aussie dollar being actually quite steep as well. Does that find a level, or does it bounce back?
I think no. I think at the moment local factors is irrelevant, right? I mean, RBA may be a bit less hawkish than what the market thinks, which we actually think they will not be that dovish. But I mean, it's global factors, right? The global economy cycle is turning lower. There's a lot of fear about China slowing. All that is very negative for Australia and for the Aussie. So I think Aussie would go to 1992 before it really bounces.
Thomas, thank you so much for your time. Thomas Harr there from Standard Chartered joining us from Singapore.